The panel topic right now is lending as a platform. Can Indian fintechs build global scale credit marketplaces? Well, ladies and gentlemen, from local roots to global ambitions, our innovators, lending innovators, are building bridges of credit that transcend borders. Now, this particular dialogue that we are going to have here will explore how platforms powered by AI and purpose are rewriting the rules of financial inclusion. And for that, we have curated a brilliant panel which boasts of people who are at the top of the business and the affairs in the lending space. And to lead this interesting and intriguing conversation, let us get our hands together with a warm round of applause. Let us welcome our moderator, Mr. Abhiroop Medhekar, co-founder and chief executive officer, Velocity. A very warm welcome to you, Abhiroop. Yes, please. We'd request you to please take the seats as per the keep your identity secure in the digital world. Okay. With that, let us have a louder round of applause, ladies and gentlemen. We are here for wisdom, insights, nuggets, which, ideally they would have maybe charged at some seminar to share, but here it's coming free of cost because that's what FinTech is all about, sharing, caring, and collaboration. Let's ensure that our rounds of applauses are higher this time as I invite our eminent speakers and panelists. First up, Mr. Aditya Singh, founder, Tapfin. A very warm welcome to you, Aditya. I hope you're having a good day here. And you did not take a lot of time coming in. Okay. Up next, Mr. Nalin Agrawal, co-founder and director, Snapmint Financial Services. A very warm welcome to you. A pleasure to have you here. Let's also give it up for Mr. Prashant Joshi, CEO, Lendingkart. We're thankful for your presence here. And last but not the least, Mr. S. Anand, founder and CEO, PaySprint, who wears his branding up his sleeve. Thank you for that. And ladies and gentlemen, that's our panel up here. With that, Abhiroop, I leave it in your able hands.
Thank you. Thanks a lot.
We have 35 minutes to go, and we are looking forward to it being flush with insights. Thank you.
Great. It's lovely to host this panel. I can see that a bunch of people must be waiting in the queue outside, but we'll try to make the most of this. So the topic that we're talking about today is lending as a platform. Can Indian fintechs build global scale credit marketplaces? But I just wanted to take a moment to also set the stage that in the last 10 years, credit in India, particularly in the fintech realm, has evolved significantly, driven by platform changes like UPI, account aggregators, ONDC, and also driven by a lot of fintech startups that have tried and solved different pieces of the puzzle. I believe the last decade was primarily about digitizing credit, but the next decade could be about building a global scale, as we are talking about now. It could be about solving for inclusion. It could be about leveraging AI to actually solve for innovation. And these are all the themes that we are going to unpack and explore today. I would like if all of you can just give a very quick introduction in a single line what your company does, and then we can dive into some questions that will set the stage.
Hi, this is Anand here. I represent PaySprint, and we largely work in three segments. We work across identification, verification, we work across payments, and compliance.
Hi, my name is Aditya Singh. I'm the CEO co-founder of Tapfin. We're a technology and financing company, both fintech as well as balance sheet, in the sustainability ecosystem. Do a lot of work with the clean mobility startups in the country.
So Lendingkart is an MSME-focused lender with significant digital capabilities.
Snapmint essentially provides no-cost EMI on UPI to consumers in India for buying whatever they want to purchase online.
And I'm the founder of Velocity. We provide working capital financing to e-commerce sellers. So I believe on the panel, we have a good mix of people across SME lending. On the consumer side, we have infra companies also, which are all trying to solve different pieces of the puzzle, as I mentioned earlier. I would love to unpack a few definitions first, right? So to start with, the two terms that I want to pick up from the title are credit marketplaces and global scale. So I'd love to get some thoughts on what is really the meaning of credit marketplaces. Maybe I think, Prashant, you can take that question about what really the marketplaces mean. And then the way I'd like to conduct the session is that in case anyone has views that are additional or differing, feel free to take up the mic and voice your opinions. I'd love to keep this engaging.
In the way we look at credit marketplaces is in two forms. One is a pure credit marketplace, where someone is actually generating the demand for credit, right? And the other one where that credit is getting financed, and more importantly, and hopefully, the credit is getting collected back as well, right? So to me, the credit marketplaces could be either of these two or a mix of these two, right? So someone large who is actually generating the demand could possibly be even having a balance sheet, right?
Yeah.
But the way the more the models have evolved, at least till now, not just in India but globally, is that some of the call them fintechs, right, have actually been at the forefront of generating demand and then using banks,
Yeah.
for funding that demand. So there are very few examples, where someone has done this together,
Yeah.
and been able to create scale.
Yeah, yeah. So basically, we are saying that globally there are examples of people who have done lead gen for banks. But I was also doing some research before this panel, right? And I figured that even the biggest global credit marketplaces, which are pure play marketplaces, which purely originate, have struggled to really get to significant scale. And would love to hear your thoughts, for example, at your Nalin, if you have any insights on why that is the case. Why is it that global marketplaces have suffered? And what are sort of the implications of making it work?
Sure. I think, Abhiroop, you'd remember when you were working for your previous organization, you were evaluating us for a Series A round of funds. I think it was way back then that, even we had the entire thought of building out a credit marketplace. We said that building out a balance sheet is not the real play of a fintech. We need to build out a marketplace out there. As a consumer financing company, what we started was something like a 0% EMI on smartphones. And that is what we started doing. We started working with 2-3 banks while doing that. While working with the banks, the entire process with the banks was really very challenging, right? That once someone says, I want to buy the smartphone, it would then go to a bank. There was a concept of a straight-through approval process, which even exists today, where banks approve 15-20% of the loan applications that come automatically. And once that is done, otherwise, for the rest 80% of the consumers, there is a long process, which takes typically 4 hours, 5 hours, 6 hours, even to a day or 2 days to actually evaluate the application and give you a yes or a no. And that is where we started from, because we didn't have a choice at that time. And over there, I remember one of our consumers, she had just bought a smartphone for 15,000 rupees. She had paid off 2 of her EMIs. We were just doing a consumer research, called her up and said that, how did you love the experience, etc. And get to know her. She said, I just got a raise. And we said that if you got a raise, why don't you close your loan down? She said, I don't want to close a loan down. I'm actually flying off tomorrow to meet my brother, and I want to buy a 4,500 rupee smartwatch. Can you give that to me on 0% EMI? And this is where the first challenge for us came in. We went back to the bank and said that, you know what, this is a consumer who wants something like this. The consumer said 1 day is impossible. Why does a consumer need something for 4,500 rupees? It is impossible to actually make that work because our OPEX structure does not work. And that is where we realized that scaling up something like this is going to be extremely difficult, right? So if you look at the concept of marketplace, someone say like an Amazon or a Flipkart who work like a marketplace, they're giving that amazing consumer experience. But to give that consumer experience, they had to land up owning the entire supply side. Yeah. And that is what we started seeing. Today, we do 1.5 million loans a month. And in doing those 1.5 million loans a month, it's impossible to work at that velocity with some of the partners behind. And that has been the challenge. Though we don't want to build out balance sheets, but we don't have a choice. We have to own the supply side. And that is where we see the challenges to match the consumer experience. How do you really make that work in a marketplace environment, just like an Amazon or Flipkart has done in e-commerce?
No, absolutely. But the point is well said, right? That to deliver a much better customer experience, you have to try and make it more full stack so that you can control the experience better. But then that could also create challenges on the scalability side, because it becomes an asset-heavy business to build your own balance sheet. Would love to hear your thoughts, Aditya, in terms of how to like navigate those two sides of a better customer experience, but also trying to make it more scalable.
Extremely difficult, as Nalin clearly mentioned. But I think it's important to sort of, I'll just build on what both Prashant and Nalin have said, is is sometimes I think you do need to sort of build a little bit of scale on your own balance sheet to actually tell the large balance sheets on how a customer experience as well as some sort of scale can be managed. But you also have to prove to them that this is being done in a very regulatory compliant, and it's extremely secure and safe, right? I think another thing that needs to be done is you need to prove to the balance sheet businesses that you're not just originating. I think there's a this is the way I look at the role of a fintech, right, in the lending space. And that's what I keep on telling a lot of people about Tapfin, that we understand technology better than financing companies, and we understand financing better than technology companies, right? And that is really the intersection at which you need to play. If you just look at doing origination and not try to understand financing and break it down into a consumer segment, right? You don't have to do a horizontal. You can actually pick up a very a consumer segment, go to massive depths to understand that business persona or customer persona, or just a business segment, and you build out a scale very specifically for them. And if that's a segment that the large balance sheet people are not touching, and I can give our example in the EV space and the clean mobility space, the large balance sheet businesses in the B2B SME lending spaces have not come in, right? Yeah. Therefore, we are going really deep down. But you're right, it's difficult because we are also building out a fintech platform as well as our own NBFC, which essentially is a test bed to prove that all the data that's available in this IoT-driven ecosystem is relevant from an underwriting perspective, right? Yeah. And then you sort of think of scale. So we're building for a consumer segment, for a new technology space, and then we're going to look at scale.
Great. And your company, Anand, that focuses on the API layer, right? So you would be privy to a lot of details in terms of how to make the bank partnerships more scalable. Any thoughts on how that has evolved over the years, and then what is the success formula for the scalability to really be solved?
Well, I mean, one thing which is very interesting today is while there's a problem statement today, as as we all know, but I think the opportunity size, exists, and the way we look at it is key. Maybe solutions of marketplace may work for specific segments rather than as an overall as a business, right? And we have seen enough examples that people have solved when they work for specific segments and they've created solutions and it worked pretty well, right? And and those things have really done well. And I think we may have to think it in a more a broken way rather than thinking that everything will be able to solve everything at one go. Everything will fit one. I don't think that really works. Yeah. And that is what our experience has been. And while we looked at creating a space where we could offer small loans to let's say SME customers, and what we also realized that it can be different for segment wise. Everything, if I say SME means everything, right? SME, MSE means everything, right? It includes all different industries, but it may not really solve the purpose, right? So until we create specific solutions in terms of lending for specific segments, then we see that there are tractions that are happening across, and we're able to bring tractions across and make it exciting for that particular segment for customers to buy. And that's been our learning, and what we do is so we don't really go across overboard and say, okay, any SME can come in and pick up a loan. It doesn't work. You'll have to really differentiate it. You have to look at it, different industries, maybe travel, logistics, have a different understanding and how you really want to do it for them. And but I think what is very interesting that we've seen is today India is a young country, right? And we've also seen major loans, more than 60% loan today go to less than 30 years of people. So it's a very and who are more tech savvy. So what we look at very interesting for us is to say that we're not there at kind of a marketplace, but I think it's an opportunity size which all of us should look at, and industry specific segments we should be able to look and work around with. That's exactly how we look at it.
No, absolutely. I think that's a great point, that in order to really stand apart, you have to focus on the opportunity segment by segment, go deep and like build something that is much better experience for the customer. And that's also creating a unique positioning of your business in front of your banking partners and others, because they would value the capability that you're bringing on the table there. I would also just on the definitions, because we're talking about global scale here, right? So on the panel, we could be like focusing more on figuring out how to take the tech innovation, the fintech innovation from India globally, or we could talk about sheerly the scale of it, right? I'd love to get some thoughts on what global scale really means. I mean, if we think about building a global scale credit marketplace in India, then what should be the ambition of the ecosystem there? Any thoughts from your side, Prashant, on that?
I think we are today, what, 17% of the global population, right? And if you look at the number of, assume that 7 crore tax returns are getting filed, right? So we are talking about 30 crore, 7 crore, assume these are households, right?
Yeah.
There is some overlap, but irrespective of that, there is at least another about the next 30, 40 crores, right? Which are still there, out there, and who still may not have access. Some of them may have access, but most of them don't have the access. Neither do they have the per capita at this stage till the country evolves to a certain stage. So I think in terms of getting to scale, the global scale is available in India, right? Now, how to develop a economic model, which can withstand time, right? I think that to my mind is the key. I don't think we need to go out and look for scale. I mean, that will be a travesty if you're sitting in India, we were doing that, right? So, yeah.
Yeah, I think it's about, so if we, in terms of scale, as he rightly said, right, it's a massive population. There are multiple segments that exist. I think what is common across why things changed over 2020, 21, right, was essentially the entire concept of the digital public infrastructure.
Yeah.
And if you look at the entire digital public infrastructure, there's a massive innovation in this country. We're looking at your KYCs, we're looking at your account aggregator ecosystem, or the ULI ecosystem that is coming in. And I think for the, I mean, even if, I mean, the scale is huge, but if we can somehow or the other package the entire digital public infrastructure along with the scale that is there, then the entire package is what can be exported out. And that is something is where a global scale can come in.
Yeah.
So I just sort of add to that, right? I want to change it a little bit, right? It doesn't have to be global scale. As they said, I mean, India is a globe in itself, right? The massive scale that you're available. We haven't even touched the surface yet, right?
Yeah.
But what about global impact, right? As the DPI, the infrastructure that's being built here, right? The layers of understanding that we're building here, the business models for fintechs and lending institutions, how do you underwrite? I think those can be exported, right? So the impact of what we build here for a very, very unique demographic profile, right? Is what I think we should measure how, what Indian fintech should be doing over the next 7 years.
Absolutely.
I think just to add, I think lending is also not about just giving money, but also an ability to collect money, right? And and being in the entire identification verification space, what we've seen in the last few years, especially post-COVID, is we've seen the amount of information and data, especially alternate amount of data that we've been able to gather and predict, a customer getting churned, or our delinquency going up. And I think those have really helped in terms of avoiding, ensuring that collections happens on time, or you're able to take action at the right time. And that, I believe, is a big game changer, which I believe was not there earlier. And that's really helped because you made your entire process much more efficient. And that's really a change in the entire thing, especially in the verification identification space that has happened. And we see so many examples of organizations using it, pre-risk monitoring of what they're doing, and I think they're much more efficiently at what's happening, what we see today.
No, absolutely. So what I am taking away from this is that we have a lot of building blocks in place. We have a huge population that is now digitally connected. We have digital public infrastructure that is available and that is being used at scale. We have a thriving fintech ecosystem and a culture of innovation, right? As you think about the next decade, right, pretty much, which is basically 2025 to 2035, how do you see it evolving? I mean, what trends are at play here, and what are you most excited about? And we can start with you, Anand.
Well, I think excitement is obviously towards AI, right? It's a buzzword today. So, but I think practically, I think it's something that's getting to use. People experimenting it now. Your ability to get things, decision making is much faster. much more efficiency. You have a huge amount of data that you can look at and can decide whom to lend, whom not to lend. And I think what's going to change as you go across, how fast are you going to lend, right? So I think, I mean, if you're going to take time to lend, if it's going to take days and months for you to make a decision, it's not going to be exciting anymore. So the fastness in which you're able to take decisions to lend, I think that's one. And how critically are you managing that fast lending that the guy is paying you time, and is there any danger that's lurking around, and how you're able to collect money faster. So I think, and what we see is, rightly said, building blocks in place. It's all about putting it together, things together, so that it become much more efficient, it become much more faster, and the real case of somebody getting money faster and also able to collect faster. I think if that happens, we'll see a huge amount in the next decade to come in.
Yeah. Any thoughts from your side, Nalin?
I think, as you rightly said, right, last 5 years have seen such a huge investment in the infrastructure. And what we are really excited about as a consumer financing company essentially is that if you look at India, 1.4 billion population, right? In the top three, just the top 3% of the population, we have 32 credit card companies who are surviving. You come down to the next 25, 30% of the population, this is the population which is consuming at a massive pace. And when we look at the population that comes next, the entire BC network that has been built across the entire segment, right? They are serving those households. The young ones of those households are entering into the entire consumption space in the next 10 years. Yeah. So, and even from that perspective, if you look at the per capita GDP of this country, which you're looking at, say, $3,000 to $3,500 versus US, which is $49,000, right? In the next 10 years, this is going to double. Yeah. So the consumption is just going to double, and all of these guys, the young ones of the entire population that is down there in the last 30, 40% of the population, all of them are going to come up. Yeah. And if the digital infrastructure for that is ready, then the amount of impact that can bring in terms of consumption is what we are really excited about.
No, that's well said. I also wanted to quickly get some reactions from Prashant on this, because at Lendingkart, you focus on SMEs which are unserved or underserved right now, right? So as you think about credit for them, what trends are you seeing? What are you most excited about at Lendingkart?
Yeah, I think I'll just make two points there. One is that I think there is a general feeling that there is this hapless, helpless MSME customer, so who doesn't understand credit, who doesn't know what to do. And here comes the savior, FinTech, trying to do something. I think first we need to get out of that mindset. Yeah. In all fairness, and I worked in my past life with banks as well, right? By regulation, banks needed to put one branch in rural areas when they put three branches in the urban areas, right? So first, I think MSMEs are incredibly smart, right? So, and therefore, we need to give them solutions which make sense to them. So that's the first thing. I think that's what we are learning, right? And the second thing, which also goes back to your earlier question, is that in the next 10 years, there'll be someone, I don't know whether it will be us, someone else, anyone it could be, who will, technology and balance sheet, both someone will blend to become a scale player. Yeah. All right, because banks, as hard as they try, this segment will still be what, 10, 15, 20% of their balance sheet, not beyond that. Correct. But as fintechs, we learn through cycles. And as we understand that technology is important, right? But it's not the only thing. To survive, you need much skills, much more beyond that. Right? So if we understand that, I think in the next 10 years, right? If you understand this customer well, and try to supplement the technology that we have with balance sheet and other skills, with a reasonable chance that at least reasonably scaled player can come out.
No, absolutely. And Aditya, any thoughts from your side as you think about the next decade of evolution of credit in the country? And what are you betting on at Tapfin?
Well, we're betting quite big on the sustainability space, which, if you believe the macros of sustainability, then that is in a sense is a white space, right? Because people don't know how to underwrite this ecosystem yet, right? And it's constantly evolving, right? You can talk of lithium ion today, and sodium ion, solid state battery. So I mean, the depth of information available. And that's where I think technology plus financing sort of plays a role. Someone who understands technology well in depth would be able to then create financing products around those. Right?
Yeah.
I sort of look at lending even right now as sort of like, inflection point of where maybe payments was a few years ago.
Yeah.
Right? Where banks was sort of ignoring it because they were small ticket size, sachet sized, not really building infrastructure because they'd much rather focus on their multi-crore corporate books, right? And look where payments is. If you go downstairs and all the large stalls are payments and massive infrastructure companies that have gotten built out of it, right? You don't see too many lending people still putting up stalls because the balance sheet guys are not here, right? They're not the ones who are putting up a stall. They expect us to sort of go and but that's what you have to convince them, right? You understand their business, or you tell, actually not just origination, as I said, you actually bring them something that they don't understand.
Yeah.
Right? And I think that is how do you put all this together, right? What is the information you get from DPI infrastructure? How do you use the information available to do collections, right?
Yeah.
Massively under, evaluated part of the lending life cycle, right?
Correct.
I think the role that fintechs and the platforms would need to play is one package solution very specifically for even a customer set, right? If we try to solve for, as I keep on saying, on a horizontal, and focus on a customer that banks are also looking at, and you don't offer a differentiated product, I think it'll be difficult. But I completely agree with the optimism on this table that there will be some tech plus financing institutions that will come out and scale.
No, absolutely. And to just like change gears a little bit and to like combine optimism with a bit of realism, I'd love to get thoughts on what are the potential roadblocks in your opinion. So as you think about building a global scale credit marketplace from India and for India potentially, right? What are the top roadblocks, top challenges, or the top enablers required to like really make it happen? And we can start with you, Nalin, on this in case you have any thoughts.
So essentially, I think regulator and policies, right? I think that plays an extremely important role. And from that perspective, I think it's been a great journey for the last 3 or 4 years. But there's been one thing, right? All the NBFCs where all of us look at things in a particular way, our strength is distribution. Our strength is across the consumers that we're distributing, how do you actually underwrite them? And where do you draw the lines of risks, KYC, AML, et cetera, right? And if that can be supplemented with a strong balance sheet, then it can unlock distribution plus balance sheet can unlock a massive opportunity here. And I think that's what we have seen, at least globally, is right, that yes, you need to work in a regulated environment because there are customers involved, there are challenges involved out there. But if you can actually, so a marketplace where probably you can sell off your entire portfolios every day, or you sell off your portfolios in real time, you take the risk, make it available on the marketplace, okay, for others to buy it out extremely quickly. And if that infrastructure, something like a Treads marketplace that has come up for SME lending, if an infrastructure like that can be brought up by the regulator, then a lot of capital can be freed up. The cost of financing for the consumers also can go down because the cost of capital that one can get access to in real time goes extremely high. And if something like that can work out, then I think the scale that can come out is massive. Today, unfortunately, we are limited in terms of what is the portfolio that you can actually securitize, et cetera. But I think that is some place you'd like to see the next set of action.
So on that point, actually, I'd love to just make it simpler for the audience about what securitization really means and how does that compare with pure play marketplace origination. So if you can explain that, I think that will be helpful about how the securitization really works and how is it different from just originating demand for another lender.
Yeah, sure. In securitization, essentially when a loan comes, right, you're an NBFC, it comes, it sits on your balance sheet. And then you expose the portfolio out to others who can buy that portfolio from you at a certain cost. Say, for example, you have 100 loans at 18% interest rate which sit on your books. There's someone else who is willing to buy that off at, say, a 16%. You take the responsibility of servicing the entire loan. You get some servicing fees to whom you have sold. And that's how you're able to, and whoever is buying that out gives that money up to you upfront. So, and then you use it again to lend the next day, right? So you're rotating the money extremely fast while the balance sheet sits somewhere else.
Yeah.
If you can do that, I think it's a concept which is prevalent globally. In US, almost all the players, at least in our space, who operate there, operate on this model, and they made this model extremely successful. It expands the availability of balance sheets, essentially banks, your private funds who can come in and start working with you. So I think if that infrastructure can come up and become more transparent,
Yeah.
that'll help.
So, as you're talking about that, the key thing to solve is technology plus balance sheet, right? And it seems like doing a great job at securitization would be a key enabler there. So, wanted to understand your views on how securitization has evolved in the country, and what changes are required, in your opinion, to like really make it fly. Prashant.
Yeah, I think the co-lending ecosystem, particularly in the last 5 years, right, has developed incredibly well, right? But the challenge with that ecosystem is that the scale, even with that, is limited, number one. Number two is that there is no real risk-taking ability that banks or the financiers have, right? So everyone wants the risk to be fully covered, right? So that's tough to my mind. And which is why I say that unless we have FinTech ourselves are able to do tech and balance sheet both, will be limited, right? And on a lighter note, Aditya said payments companies are down, lending companies are, because payments companies are financing these stalls through their capital, not yet through earnings, right? So lenders need earnings to put stuff here, right? So if we want to succeed, I think we are biggest enabler, we are the biggest roadblock. Right? So if we focus on capital valuation, that's the only thing that we focus on, we are in for trouble.
Correct.
Right? If we think about unit economics, earnings, sustainable earnings, growth, then I think we should be able to. Remember, HDFC Bank today, top 10, top 15 market cap banks in the world. Taken them 30 years to do this.
Yeah, absolutely.
30 years. It takes time to do it, right? So if you have the right intent and give it enough time, there's a good chance that we can make this.
Yeah. And any additional thoughts from your side, Aditya or Anand, as it comes to like roadblocks to make it happen, right?
No, I think they've covered it, and you're right. I think the margin construct for a lending business or any fintech business on the lending side or a marketplace, it's very easy to lose track of that, and then spiral downwards, right? Because as Shant rightly said, it takes time to build these businesses, right? You need a lot of patient capital and a lot of diligent capital, right? And the margin constructs have to play into this. Sometimes, at that this is a dichotomy, right? Scale versus or growth, versus diligence. But that's what it is, right? So we ourselves could be some of our biggest roadblocks if we lose track of what is really important, which is unit economics and margin constructs.
Yeah, and yeah. So, in particular, I was keen to get your thoughts on the challenges when it comes to partnering with banks and to really unlock that part of your business, right? Because that's a coordination overhead, that's a technology integration that needs to happen. How have you seen it evolve in the past, and then how is it like bound to play out in future?
Well, at least with the, let's say with banks, what we've seen in the last 10 years, the evolution has been, on a very positive front. I remember 10 years back, when you would walk into a bank and ask about, let's say, how do we integrate, half the time, bank would be, the word API itself was quite a word which, banks didn't understand what we're talking about. And it took a lot of time for us to really go back and tell them what exactly we're trying to tell them and what exactly we're trying to make things happen, right? And what we see today, at least a much better evolved state in banks. Banks today most of the banks have digital banking as one. We see professionals who understand what you're talking about. We see them understand what we bring on the table. And I think so that's been a marked change in what banks do. But yes, any implementation, obviously today, I think the roadblock is any implementation that takes time. Any the bank is 3 to 6 months away, and you have a lot of patience for you to really make that happen. Please work with them to make things happen. But I think the good part is that We have banks who are tech savvy, the banks who are not tech savvy, and the banks who have built in a good framework of APIs. And so the working has become much better, but but I think still it's much better than what it was earlier. But it's a long way to go, and a lot of work with banks to make things move. But yes, I think it's in a very positive direction, and they see the value that we bring on the table for them. So that's a good part about it. Yeah.
Yeah, I can see that we are running out of time. But as closing thoughts, I would love to hear from you about the white spaces that you see, right? So to like frame the question differently, if you are a fintech entrepreneur starting up today, and you want to sort of solve for credit in the country, which remains a massive opportunity, right? Then which one specific area would you be most excited about to like build in? And we're going to start with you, Nalin.
I think innovation comes from understanding the consumers. I obviously will not have a prescription to where you would start, but I think India, as he rightly said earlier, right, it's a massive country with multiple segments and multiple needs. Just about focusing on one small segment, because every segment is a multi-million-dollar opportunity. Focus on the needs of one consumer segment and one particular need. Kick off your business from there. Automatically, things would start scaling.
In our own space, we learned that at least for now, unless there is a physical touch with the customer, we don't understand the customer well enough. Yeah. Right? I think that's where agentic AI, while there is a lot of hype around AI, but agentic AI will play an important role. And I'm incredibly excited about that. Yeah. Maybe it will take us 3, 5, 10 years. I don't know what it will take us. But when that happens, it will dramatically transform the landscape. Yeah. So that's what I think I am excited about.
Great. Aditya?
Yeah, I mean, I think they've sort of covered it, because agentic AI will solve for a lot of things. It's a journey. And what I would say is, I think what happens is a lot of fintech entrepreneurs or anyone starting out in the AI space sometimes just looks at lack of data available to them too, so therefore end up just building wrappers around what's existing. But as I said, pick a consumer segment, you start with small language models and this really understand the consumer, and that's going to take a lot of time to do. To understand consumer in depth, you would need to meet consumers, spend a lot of time with them. We give a lot of focus on straight-through processing and real-time loan disbursal and perfection. Yeah, but nothing in this space. It's going to take a bit. You cannot not understand the consumer and do lending.
And on the topic of AI in particular, I wanted to understand any specific area of your operations, of your workflow, which where you see a massive and near-term impact of AI?
So, as I said, we're in a very weird space where we're actually building we started out as a fintech company and then an NBFC, and now we're actually building some core tech out for lenders to be able to monitor their EV portfolios, right? Because there's so much data. So we're deploying a lot of AI because that vehicle is generating data on a real-time level, right? So how do you build early warning signals depending on utilization of the vehicles, right? Yeah. Similarly, we're trying to get the fleet operators up to speed on how do they get to a point where they're lendable, right? Yeah. So how do they utilize data? So we're deploying a lot of things around how do you do fleet planning using AI, and how do lenders monitor their portfolio and identify early warning signals or positive signals from the data that's available.
Great. And any thoughts from your side in terms of where you see the biggest opportunities?
I think just to add to, India is a big country, and I think our experience in every market is different. What works in Delhi may not work in Bombay, may not work in Calcutta, right? You have to really specifically work in markets to understand the customer. How does he react? So we have seen massive. I mean, what we have seen success in, let's say, Delhi doesn't work in Bombay at all. So then we have to change and we have to look at customers' preferences here, are in Chennai, or Bangalore, whatever. So that's the opportunity. That's the beauty about India, that you have to really understand customers in specific locations to build products for them. So, and I think that also probably keeps us excited, but also it's a lot of challenges to do that. But yes, I think that's an opportunity. Yeah.
Great. So with that, I'd like to close the panel. I'd like to thank the panelists for so much optimism on the panel and some amazing insights that we got to know. So big round of applause for the panelists, guys.